What's going on, party people? It's Mortgage Mike. Hope you're having a fabulous day. Thank you for tuning in, and thanks for jumping into this video today with me. Today's topic is 3% down is all it takes. I'm going to go in and share with you 3 different loan programs that are available through Prime Lending that I truly would benefit you if you're currently paying rent and you're ready to dive in and own a piece of real estate in sunny San Diego. Now, a lot of people still ask me till this day, Mike, I don't have 20% down, but I really want to own. Can you help me? And the answer is yes, I can help you. Yes, you don't need to save 20% down. Yes, you can own a piece of real estate in San Diego with little as 0 down if you're VA. But for today's topic, we're going to talk about conventional loans, 3% down to get you to start building not only equity, start building wealth, but help you say goodbye to your landlord. So let me go ahead and jump into my main screen today so that you guys can see what's going on my end. This is a total cost analysis. This is my rent versus own analysis based on 3% down. What I did is provide you guys a purchase price up to $450,000. Why? Because I really wanted to keep your mortgage payments close to what you're paying today. If it's $2,600, if it's $2,800, but for today's example, I just put $2,600, as you can see highlighted below. So if you're paying rent, you know that every time your landlord wants to renew that lease for you, right, for another year, 2 years, what do they usually do? That's right. They increase the rent. That's how much they love you. They want to increase the rent. With the mortgage, for the next 30 years, you'll notice that your mortgage payments never change. It's only going to change if you decide to refinance it to a lower rate, or it's going to change because PMI gets removed after you hit 78% of the loan to value. But we're not going to talk about that today. Today, we're going to talk about 3% down, 3 different programs to help you get into your first home. So let's take a look at this program right here. We have 3% down. First option, this is your Home Possible program. Thanks to our friends at Freddie. They allow you to put, again, 3% down, and that money can be gifted. It could come from a family member, so keep that in mind. Down payment is $13,500. Loan amount is $436,500. And today's interest rates with good credit, I'm not talking about excellent credit, I'm saying good credit, is 3.25. So you can lock into a rate at 3.25, 30-year fixed, 0 points, no prepay penalty. That's going to bring your mortgage payment to $2,811 and 38 cents. Not bad, right? The second option is our 3% down Home One program. Now, the reason why I put this on here is because this program allows no income limits versus the Home Possible program. There's going to be some income limits per zip code, per county, in order to qualify for that program at 3.25. Now, let's say if you find a property that you do like, but it doesn't fall into that zip code area for income limitations, then you can go with the 3% down Home One program at 3.625. Again, 30-year fixed rates, 0 points with good credit. Monthly payment is $29.02 and 36 cents. Now, another fantastic program that we have at Prime Lending is our 3% choice renovation program. Renovation, that's right. So let's say, for example, you find something for $400,000 and it needs a little bit of TLC. Let's say the kitchen needs to be updated, the bathroom needs to be updated, and you want to go ahead and get some renovation done. Well, we'll help you with the home loan. We're also going to help you with the cost of renovation. So for a simple example, let's say you get into escrow for $400,000 and the renovation cost will cost $20,000. We'll take the $20,000 and put that on top of your purchase price. So now you're financing $420,000 with only 3% down. So keep that in mind. And as soon as you close escrow, you can start renovations on your own home as soon as possible. And again, those rates is going to fall at 3.75. So let me clear all this yellow highlights right here so that we'll focus more on the mortgage payments. So first program, Home Possible, $2,811.38. Second option is $29.02 and 36 cents. And the renovation choice, $29.33 and 20 cents. Now you're probably asking, Mike, what does that include? Where does that payment break up to? So let me break this up for you. More info. It's going to include your property taxes, right? We all need to pay property taxes when you're a homeowner. You're going to pay hazard insurance, right? Just like you pay on an auto loan when you're financing a car. You'll be able to shop around for your insurance quote as well, too, so keep that in mind. I do work with some local brokers here in San Diego. They can provide you different options when it comes to premiums and payments. And then because you're putting less than 20% down, there's insurance that's tied into this program. It's called mortgage insurance, also known as PMI. So this PMI, based on 3% down with good credit, it's going to range about $349. So keep that in mind. I left HOA blank for the time being because between $350,000 to $450,000 price range, there's going to be a combination of detached properties and condos, townhomes. So if you're looking at a property with HOA, you want to go ahead and factor into your total payment. That could range between $250 all the way to $350, depending on the location. So just keep that in mind in terms of what you're looking at is just basically your principal and interest payment, hazard insurance, property taxes, and PMI. Not bad. It's still under $3,000. Now I'm going to scroll over to this rent versus principal pay. This is an eye-opener for a lot of folks when I put together this total cost analysis for them. So in the next 10 years, if you continue to pay $2,600 and more, because every year rents continue to go up, I'm not saying appreciation, but go up in price, let's say 2%, as you can see right there. Take a look at these numbers, you guys. Look how much you're paying in rent for the next 10 years. $341,631. That's a lot of money. That's a lot of money. Now, if you take a look at home ownership, right? The benefits of home ownership can be seen over time. And again, this is just 10 years. The tables in this analysis reflects an estimate of the cost savings as well as the equity you will build based on your principal reduction. Remember, as you make your payments every month, your principal balance reduces and your home continues to appreciate. That's amazing. Take a look at the total equity. It's all right there. It's all in black and white. It's actually in green for you guys. Green means equity. It means wealth. If you are interested in finding out more about these three programs, please give me a shout. I just want to reiterate, you don't need excellent credit to qualify for these conventional programs. You just need good credit. So for more information on how to qualify for these programs, please feel free to reach out to me. We'll get you up. We'll get you taken care of and get you set up for success. So when the time comes and you're ready to start shopping with your real estate agent, you'll have a solid pre-approval and the confidence you need to start submitting offers. All right, you guys, that's all I have. Thanks for tuning in. Take care, and I'll see you at the next one. Thank you. Bye-bye.